First told us about the company's potential back in 2014.
The opportunity here is not for them to do 35,000 cars on the way to 50 or 100,000. The market is for 100 million cars a year. Like maybe they could do, in 8 or 10 years, they could do 1 million or 2 million cars a year, but the potential, they could do 10 million cars a year in 15 years. So the potential is enormous.
What have you thought as you've watched the stock go up 80%?
Well, you got to remember that 2014, when we were buying our stock, about 1.6 million shares at an average price of $219. And that period of time was when this company wasn't profitable, was expanding rapidly. It was being criticized by short sellers. It was very difficult for them to get started because dealers would try to prevent them from selling cars in individual states. But now things have all come together. But in the period of time since 2014, the stock price didn't change very much. So we made 10%, 20%, 30%. At the same period of time, the company's business, we focus on business, not stock prices. The company's business had grown from $2.8 billion of annual revenues to $25 billion of annual revenues, eightfold. So the company's up eightfold, stock's up 20%, 10%. Now what's happening, this is just catch up. Now this year, Tesla is going to do somewhere around $32 billion of revenues, and I guess that they're going to do $100 billion of revenues within 4 years. And I think they have potential for $1 trillion of revenues within 10 years. So basically, you're looking at the very start of what's going to happen with Tesla. This could be one of the largest companies in the whole world.
$1 trillion in revenue in 10 years?
That's assuming you do 10 million cars, and that's without the battery business. So I'm thinking that we're thinking $750 billion to $1 trillion of revenues just on the car business. Elon says that the battery business is going to be as big as the car business. In addition to that, when I'm thinking about 10 million cars a year, the last conversation he had, he said it was 20 million cars is what he thinks he can do. And so what we're talking about is a business that right now, demand is overwhelming for the product that they're selling. And they're constrained as far as making as many cars as they could sell because they don't have enough batteries. So now there's a nice announcement today about Panasonic making money in the plant they have in Reno. But they need to have more batteries. So they're going to have a battery day in a few months. They're going to have all the analysts coming out, and they're going to show how they're addressing the issue of where are these batteries going to come from to make all these cars that are possible to make.
You're clearly still very bullish.
Yeah,
but it's moved 80%. It's moved 80% since the beginning of the year. Just in terms of discipline in maintaining a portfolio, do you lighten up on any of that position at all? Because you think, you know, I still have a large position, even if I sell a little and book some gains. Or no, you're holding the whole thing.
Not a share.
Not a single share.
No. And in fact, one of the portfolio managers was speaking to me yesterday, and he said, "Ron, shouldn't we sell a little bit?" I said, "I'm not selling anything. This is the very beginning of when Teslas get started."
So here's the question.
I'm hoping we get more assets so we can buy more
make
stock.
it the #1 car maker in the world.
Well, I think Toyota's
about 10 million now.
A little bit more, 12 or 13 million. But a lot of those companies are. I'll deal with the competition in a moment. But go ahead.
Well, no, so that was my question. I was putting Toyota in the 10 to 12 million category. Effectively, Tesla has to become the next Toyota for this the numbers to be what they are.
Yes. And
so the question is, how do you consider the competition? And why you're so convinced that they will be the next Toyota, if you will? So the question ought to be, well, how come, if it's so easy to make a car, you know, it's so difficult to make a car, and how could Tesla possibly be successful? And how come the other automobile companies can't just crush them? Why can't they do that? And there's two big issues that the existing automobile companies, let's say they sell 90 million cars a year, and let's say it costs $5,000 of capital spending per car in order to make 90 million cars a year. So they're invested $450 or $500 billion in their existing facilities. That's making, probably 40% of that is making motors. So basically, when you're transferring from an internal combustion engine into a battery, so here you're Toyota, or you're General Motors, or you're Ford, and I come along and I say, hey, listen, we don't need to make those engines anymore. Let's use my battery. And you've already got these, $200 billion invested in engines. Are you going to really stop that? So that's one challenge for automobile companies. In fact, the automobile manufacturers in Germany were fined by the regulators saying, how come you're not moving faster on making electrification? The reason they're not, of course, they're going to obsolete
all those investments they have, that's stranded assets. So number one, financially, it's very difficult because they have to invest as much in making electric cars as they're going to have to write off in motors. And where's that money coming from? That's one. Number two, the challenge is that the dealers distribute these cars all around the country, franchises, irrevocable. And the dealers make money not on selling metal, but on servicing the cars. So if you have all of a sudden a replacement, and that's all the distribution, and if you have all of a sudden a replacement of engine that has all the service requirements with a battery that doesn't have any, and you have the parts that are so few compared to thousands in a regular car, why should a dealer, when you call up your dealer and say, I'd like you to sell the electric cars instead of the gasoline engine cars, what are they going to do? They don't make their money that way. So they have to totally revamp the whole strategy.
Incentive system.
Yep.
Hey, Ron, I've got a question from Rick Reeder over at BlackRock. He's a Tesla owner and a huge fan. He actually sends his congratulations along, says that you saw this long before anybody else did. Now there are all these analysts who are kind of jumping on board with this. But as an investor, he said you should be congratulated for what you saw so early. But he does have a question. He says at today's valuation, it's going to take a long time for the cash flow to catch up. At what point do you think the valuation is too far ahead of the medium-term cash flow potential?
Well, at the last conference call, Elon noted that the demand for the Model Y is going to be greater than the Model S, X, and 3 together. So that's number one. So you have that big increment of demand coming on. Number two, Cybertruck, he said, is going to be in such demand they can't foresee how they can meet demand for 3 or 4 years. So that's another one. Then they have the big 16-wheeler truck. That's going to come on sometime. Then you have autonomous driving. That's going to come on sometime. Then you have the replacement of the peaker plants for utilities with these massive batteries. That's growing 100% a year. That's going to come on sometime. And then 10 years out, there's still a lot of growth coming because you're going to have these autonomous fleets of cars. And then in addition to that, you're going to have logistics business like Amazon has. So basically, you have, it's not just the next 10 years it's going to be this phenomenal growth. You have years after that. And we're talking about a business that's growing 50% a year. So if I'm thinking that in 4 years, they're going to do 100 or 120 or 130 billion dollars of annual revenues, and say they make a 15% profit margin, operating profit, that doesn't mean they're reporting it because they're going to take money and spend it to grow faster. So we make a lot of money by investing in businesses that are building factories, that are launching satellites, that are building hotels, casinos. And so while they're building them, they're not making money from those investments. Tesla would be building factories, and that's when we're investing in it, when that's happening, and penalizing profitability. So how much is this worth? If you have $15 billion of profitability, so-called, in 4 years, why wouldn't that be worth $300 billion in 5 years, 4 years? And then on top of that, if you get out to, I forgot the roofs, the solar roofs, that's another $40 or $50 billion business a year. And that's just starting as well. So there's all these increments, and the demand is growing so rapidly. He says that he's going to grow 50% a year, 50% a year, for as long as the eye can see.
Do you care? They say that they are now building towards profitability. They've been profitable to this point. Do you care if they don't have profits from time to time? Do you care if it's not a straight profitability shot? Are you okay to stand by with that?
Well, he's got $6 billion in cash right now, and up from $5 billion in cash at the end of the prior quarter. He generated, after spending a lot of money, generated $1 billion of excess cash right now. This company also, it's the only growth company in the industry. When he bought the plant in California, in Fremont, it was bankrupted by General Motors and by Toyota, and it was a $1 billion plant. He got it for $50 million, 50. Looked at it and said, I don't know what to do with this place. What's going to go on here? And so then they spent on it originally, and they didn't know how to make cars so well, and they spent $15,000 of capital for every car they're going to make. Right. And that investment is producing a gross profit of about $10,000 a car for a $50,000 car. In China, now they know how to do it. And in China, the factory there cost $4,000 a car for capacity. That car, that they're going to sell it for less there, maybe in the 40s instead of close to 50, but they're going to make $10,000 in profit a car. So the return on investment is amazing. And then in addition to that, the suppliers are so anxious to do business with Tesla, they give them terms. You don't have to pay for what we're giving to you for 60 days. And they, from the time they take an order...
They give them those terms, or Tesla forces those terms on them?
Well,
I'm guessing they're not offering them up.
They're a monetary institution. They're trying to make money.
Right.
But the suppliers give them 60 days. And our guy, from the time he takes an order to the time he gets paid for it after he sells, makes the car and delivers it, is 30 days.
Right.
So basically, the suppliers, he's got negative working capital in this business. So Rick, what's it going to be worth? I mean, gee, and I can't see how, now, of course it can see, but my idea is that in 10 years, this is going to be at least $1 trillion of revenues, and it's nowhere near ended at that point in time. There's a lot of growth opportunities from that point going forward.
The ringtone on my phone is Elon Musk saying, boring, boneheaded questions are not cool, from that conference call several quarters ago. Let's call it those times of his troubles. How's he doing?
I think he's doing really well. And now that he's profitable and generating cash flow, and employees are happier because they're making so much money because their stock price has gone up, and he's being praised instead of torn at. So I think he's doing much better. And he also sent me a note a couple of days ago, and I was telling him about my Egyptian dancing that I was learning, and he told me and I said I wasn't sure I was going to be able to do it, but he told me he had great confidence I could do it, so I did it.
Well, let me ask you a question. Have you ever doubted in the story along the way since you've been an investor?
Well, I told him originally, and I'm sure I told everyone else as well, that I wasn't sure if it was going to be successful. I gave it a good chance. Initially, I thought it was unlikely when he came public at $30 or $35 a share. Changed my mind when I realized I was wrong and the stock had gone from 30 to 80. And I was out in California with Mike Lippert, and we were visiting one of our portfolio managers. We were visiting with Elon for a couple hours, and Mike had a cut out early. And after they said, oh my God, Mike, at least you're smart enough to have invested in Tesla. I can't believe I didn't. And he said, Ron, I sold it. I said, you sold it? Are you kidding? After you just listened to what he said, you sold it? He said, I sold it before. And so I watched some more, and I said, I have to own this. And I started buying at 160. So here, at $30, I didn't buy. I started buying at 160, and it took me 2 years, took us 2 years to buy. And I thought that I was going to be likely successful at that point, even though 50 car companies have failed in my lifetime. I said, this one really has a chance. They sent out a car to my house to East Hampton to drive and see if I could, Anyway, that didn't work out great, but
What'd you do? You hit something? Did you have an accident?
No, I got into the car, and it was a prototype model, and it was hard to get into it, and I stepped on it and took off so fast. I said, well, how do I know that a truck on the highway is going to see this car? I felt like I'm in a boxcar when I was a kid. And he said, and they said, no, don't worry about this. And they showed me a picture of a 16-wheeler truck sitting on top of this car to show it's indestructible. And I said, that wasn't the picture to show me. And so I looked at it, and so I wasn't convinced for a long time. And then ultimately, I said, boy, I really think this is the case.
But I mean, it makes sense.
Just one more thing.
Okay.
And the one more thing is that I said that whether he's successful or not, I am really glad that I've invested in this company because I'm helping. This guy's saving the earth. This guy's an unbelievable guy, brilliant guy, great businessman, and saving the planet.
Okay, you can be a philanthropist, but let's talk about...
I intended to make money.
Right, and you have. You've made a lot of money on this, but there have been so many times along the way when it was probably hard to stand by. Were there times that you had doubts since you became an investor, whether it was Solar City getting wrapped in, whether it was all of the issues that got brought up along the way, or have you just been steadfast the entire time?
The 420 private equity
well, I do talk to them regularly. And I am aware, so it's not me relying on what other people are telling me is, things I should think about. Mm-hmm. We're talking with them all the time, and to trying to understand what issues are, and not just with Elon, but with other executives at the company and with the chairwoman. And so we talk regularly, and no, I was never shaken. In fact, guys in my office said they were amazed that I was just sailing right through it. I was convinced the whole time that this was going to be a very successful venture, and I told other people I thought it would be. I was convinced it would be.
By the way, before we get to any other issue, at $900, if we get there, would you split this stock?
No.
No. Because, given the retail interest in this stock, you could make an argument to split it if it stays at these levels.
Well, you can make an argument that if it's retail, then what they should do is they should buy Barron Funds that owns Tesla, so they don't have to do it themselves. But
That's a good advertisement.
I don't think that it's a great idea to split stocks. Buffett has never split his stock, except when it got really high, then he gave you that little
B shares, right?
baby thing. I don't think it really pays to do that.
The B shares was more of a way of letting other investors who had been in another company he acquired go ahead and stay in and get out. Yeah.
Can we go back to the whole idea of just discipline in a portfolio? I mean, you said one of your portfolio managers asked you if you should lighten up. I mean, you understand the question, right? It's had such a huge run.
So, there was a... I want to get to that.
And you're not selling anything?
No.
Even though?
No, in fact, I was hoping that our business would grow so that I can have more money to invest in Tesla. How's that?
To add even more to the position?
Yes.
Are you adding to the position now?
If I was up to me, I would, but in the way we're structured, if we have real estate and we have in emerging markets and we have international and we have small cap funds, they can't buy Tesla stock. So basically, so let me go to price for a second. That let me do process for a second and then price. The idea is that what we do is we invest for the long term in growth companies that are competitively advantaged with great people. That's what we do. Growth companies, competitively advantaged, invest for the long term, great people. And so it's a very simple process, except people can't do it. So if you talk about Amazon, very few people in 1999 would have bought Amazon and held it when the stock went down, and then the stock went up dramatically. If they had held on, they could have done it. So basically, retail people, regular people without knowledge about it, of the understanding of business, how can you possibly hold on when you have a volatile stock? How could you hold on to test the stock when it goes up and down when you're a retail investor? This isn't retail. And retail people would come in and go out. But so my idea is that we don't invest in the market on, to go back in, on what's happening in the news, not on Asian flu, not on Spanish flu, not so not on impeachments, not on oil price, nothing like that. It's just strictly on fundamentals. And when you talk about holding for the long term, so two companies, Primerica and MSCI, both went public around 2008. And they both told me, both executives, both companies, they said, Ron, you enabled us to go public. I am forever indebted to you. Primerica said that. The stock was $20 at the time, spinning out. It's now $125. We bought stock at the originally, held on every single share. Next thing, MSCI. And this is, I'm getting to the, can I go? Or?
Yep, no, go ahead.
MSCI, Henry Fernandez. I've had him on with me in 2008. Stock was $15 a share. Had him on last year. Here's an immigrant, comes from Venezuela. I don't remember which country, one of those countries, who they had to flee the country to stay alive, comes to America penniless. He comes up with the idea of MSCI, Morgan Stanley, brings it public. We invest in it, and $15 a share in 2008. It's now $300. And we have never, so he asked me to speak to his board last week, and he wanted to understand how is it possible that everyone was buying and selling his stock and they had a speed bump when they did the risk management? How was it possible, Ron, that you invested this whole time and never sold a share? And he said that what he wanted to do was have me speak to his board to have them, so I could explain to them, how did we withstand pressure to sell? How did we do that? And I think there's another triple or quadruple coming in this one.
So what's the answer, though? I mean, we're just trying to get to the...
So he said the answer was that he thought that I believed in him.
Right.
And then in addition to that, I really liked the business. And so after I did this presentation to their board, they were 20, 25 people. Then afterwards, it turned out that the former president of Fidelity Management was sitting in this meeting. And so he walks out with me to the elevator and he says, Ron, you're friends with Peter Lynch and Will Danoff. And did Will ever tell you the story about what he tells analysts that he inaugurated an initiation to Fidelity? I said, no. He said, well, first thing he does, he puts them all in a room, and then he puts a telephone with a speaker on it, and he calls his mother. His mother is in Alabama or Arkansas, wherever I think she is, and he calls her and says, Mom, what did you always, on the speaker, and all the analysts are sitting around and said, Mom, what did you always tell me when I was young? And she says, Will, I always told you that people know the price of everything, they know the value of nothing. And so basically, that's the whole idea here. That the idea is that, of course, anyone can see the price of the stock, but you can't tell me, the regular person, that this Tesla stock is going to go up 10 times or 20 times from here in the next 10 years.
Okay, I have a couple questions for you, and we're going to go fast with them. One, Elon Musk's compensation. So he's making, he captures 1% of the company for every $50 billion of the company that he moves in terms of the market share. Are you happy with that?
Well,
find that acceptable?
Of course, I found it acceptable because I voted for it. But if you think about it, he didn't work for any salary at all for the past 3 or 4 or 5 years. And so if he makes our shareholders a lot of money, then he's entitled to a lot of money. How much is he entitled to? The board decides that, and the shareholders vote on it. And so I voted for it, so I obviously thought it was okay.
Okay. Elon Musk says on the conference call just recently that he thinks that retail investors understand this company better than institutional investors. You spent a lot of time with both. Is he right? And if so, why?
Peter Lynch would say that people, when they go into a mall, 30 or 40 years ago, when they go to a Gap store, they understand that that was an interesting investment. And I think the same thing with retail people. My grandchildren, one guy is 5, one guy is 7, and my 7-year-old a couple years ago says to me, Grandpa, that those cars, they're very bad for the environment. Tesla is good for the environment, even children. Tesla's built their whole business, no advertising. You watch on, see, a brand, everybody knows the name Tesla. Isn't that amazing? That you built a business with not a dime spent?
The stock was up 20% yesterday. It's up 12.5% this morning. That's $100 this morning in the pre-market, which maybe you're right. Maybe it's a lot of people just figuring it out. But at some point, do you worry about momentum moves?
Well, I think about it, and I think I'm responsible for other people's money. I'm the biggest shareholder in our mutual funds.
Right.
And so, on the other hand, yeah, I think about it.
Let me ask you
but I do think we're going to make 10 times from here in the next 10 years.
You said something before the commercial break, by the way, that some people on Twitter seem to pick up, which is you said, look, even if this didn't work, I was happy investing in the company because I thought that Elon Musk was doing the right thing for the world, right? Climate, all of these other issues that I know you support.
Yep.
There are some people who would look at that statement and say, but you're a fiduciary for my money. You shouldn't be investing based on whether you think this is good for the world or good for the future. Look, I always say investing in Elon Musk is like, or betting against him is like betting against humanity. You want the guy to succeed. I get that. But the question is, when you thought about this investment, I assume, or I hope you did this strictly on the financials.
I did it on the financials. I felt I had no downside. And no downside, right, even if they weren't very successful, is that they were going to be the leader in this business, and they could be acquired. I thought there was no downside. Right. Okay, let me ask you. I thought the worst case, we would double our money.
Okay, let me ask you a separate question. Given how bullish you are on the company, given that Elon Musk tried to take this company private at $420, some people at that time thought that was crazy. Do you think that he was trying to rob the shareholders?
I think he was really discouraged. If you work the hours that he works, and are under the stress that he was under, and he was being attacked relentlessly by embedded interests who wanted him to fail. And so if you're in business and all of a sudden the oil companies will be impacted negatively by what you do, and the car dealers are negatively impacted by what you do, and the OEMs are negatively, and the short sellers are negative. So all those guys are up against him, and this guy is standing alone. Wouldn't you be upset about the way people are treating you? If you're doing something that you think is great for the world and everyone attacks you every day, why would you think that's that's acceptable? And so in fact, I thought this was a really bad idea. I thought he would be better off if he remained a public company. But if he went private, I was interested in participating as a investor to allow other investors to be able to continue to hold their investment position in Tesla. And I was being considered as an entity that I recommended against doing that, but that would have been beneficial if I was chosen to be the person who had the ability for individuals to continue to invest even though it was a private company.